taxes. They keep asking me what's the difference between standard and itemized deductions. I don't know! Please help, CPA Nerds.
All right, so for itemized deduction categories, medical typically includes any kind of out-of-pocket expenses that you have over and above what insurance is paying. That's usually deducted from your paychecks. One of the caveats to that would be Medicare premiums. Those are automatically pulled into itemized deductions. And then you have all of your prescription costs out of pocket, any major medical bills that you're paying out of pocket, your glasses, hearing aids, specific medical devices that all fit into the medical categories, besides obviously paying for your doctor's fees. So you have your real estate taxes, your state taxes that come out of your paycheck. That's kind of what we call the SALT deduction. And then after that, you get into your mortgage interest. If you have bought a home and you're paying interest on your loan, that's going to be a deduction as well. Any large purchases in the tax category, so let's say you buy a new car or you have an egregious amount of sales tax that you paid on something, which we usually say is that large purchase, you are able to take the sales tax deduction on that large purchase. And then getting into the other ones, casualty and theft is a little difficult because you have to really be able to qualify, basically would be the best word, for the casualty and theft deduction. And it is subject to certain limitations when it comes to insurance company repayments for anything that was lost. And the biggest part of that is you have to be in a federally declared disaster zone in order to get casualty and theft loss anymore. So if there's a major flood and your home is ruined and it's going to cost you a lot of money, if the government doesn't declare it as federally declared disaster zone, you can't take casualty and theft anymore. So they put a lot of limitation on that. And then for gambling losses, you can take the losses up to the amount of your winnings that you're having to include on your 1040 return. So there are limitations, and basically we just tell everybody, get your losses sheets from the casinos and stuff when you go. That little card that you plug into those machines, if you'd like to go to the different casinos a lot, keep that so they can give you that. It's kind of, I hate to say profit and loss statement, but it's kind of like that. How much money did you put into the machines and how much did you lose versus what they said you won? So those are the nice little write-offs of the Schedule A.